With today's price activity, the S&P 500 has tagged the lower end of this price channel one more time. In today's video, we'll craft a simple options trade idea to take advantage of a potential reaction from this level. I'll start by sharing reasons why I think this bounce is likely outside of just this overall trend channel. We'll then also talk about some shortcomings before diving inside of the Analyze tab and taking a look at two different options trade ideas based off of your personal trading style. Now, to get started here, we have this price channel that the S&P has been trading in ever since October of 2022. This was the very first test where this price channel started. We then had a test really towards the beginning of the year. This is 2023. And now, most recently, price action is coming back down to the lower end of this channel. Every time we've bounced inside of this channel, we've made a new high, pulled back, made a new high, pulled back. And the question here that we really have is not, are we going to make a new high, since that's not the trade we're looking to play, but rather, can we use at least this optimism going on behind the S&P for a shorter term bounce here till at least the market pulse line. That's the trade premise that we're going to be using for this lottery trade idea here, is at least a test to this market pulse line, which gives us a price level of, let's call it 402.50. Now, given that, we take a look at our sectors to see what is the broader market telling us. I know these labels are a little hard to read, so I've taken a screenshot for you and blown that up a little bit so you can hopefully read this a little bit easier. Now, there's two key observations that I'd like to point out across the board. Just last week, most of these markets were in a stage of acceleration. Price action was coasting upwards. With the sell-off so far this week, price action has now transitioned to a stage of distribution. However, the sectors leading this transition down to deceleration, if we take a look at the labels, are our defensive sectors. Sectors like XLP, XLV, and XLU. We don't really see participation yet from tech, from financials. If we take a look at XLK here, XLK just looks like price action's pulling back to the market pulse line for what would then be an overall trend confirmation move once we get the edge signal. Same thing if we take a look at XLF here. So the overall sectors that I think are bringing the price action down to this overall trend line here aren't the sectors that could drag us down lower. Now, that could of course change, and we'd like to mitigate that risk as much as possible. And for that, we can come inside of the Analyze tab. We craft two different trade ideas, both of which are debit spreads, so they have a max potential risk involved with them. Now, the first one that I'll share is a simple vertical debit spread here. This is using next week's expiration, and it's a 401, 402 call debit spread, currently going for about 42 cents in debit. That's where you risk 42 cents, max potential gain of 58 cents. It's nothing too crazy, but it does have the risk to reward skewed in your favor. And the break-even point on this is below where we were looking for with the market pulse line to have to be above. So even if we didn't get a full test to the market pulse line, this particular position would still profit as long as we're really near that 401.50 mark. So that's trade idea number one. Now we move on to trade idea number two, which is an unbalanced butterfly with this week's expiration. Keep in mind here, the two contracts that you're buying are the 401s, the three that you're selling are the 402s, and the last one that you're buying is the 403 call, bringing this to a net debit of 41 cents at the moment. Now, the reason this trade is a little bit different than, say, our vertical debit spread outside of just the expiration cycle is the overall premise that if we do get a pin here near that 402 mark, the three contracts that we're selling, then our payoff is a little bit nicer compared to the max payout, which is $59 if we overshoot it. So our max payout here is similar to our max payout with the call debit spread. However, if we do pin near that, say, 402 level here, then that would lead to a really nice payout inside of this particular position. The flip side of that, of course, is you have additional commission associated with these additional contracts. So that's one downside. And you also have less time in your favor, given that this is this week's expiration and our 28th Feb basic vertical debit spread, which gives us some more time, is for next week. Either case, you have two different ideas looking to play the overall reaction here from the bottom end of this channel, looking for at least a move towards this market pulse line. That's what we're looking for. Nothing too complex, nothing too greedy. And if we do get that move, either of these two positions should help with having a profitable position that goes beyond just basics like, say, buying the S&P 500. I hope you found this video useful. For those of you looking for some option trade ideas for this week, these are definitely lottery type plays, or at least the butterfly is. But hopefully, for those of you that do find it interesting, you can craft it to work a little bit better for your style and implement it to try and take advantage of a potential reaction from this point. Take care, everyone. Good luck trading, and I'll see you in the next update.